We explore the most significant development in the XRP story to date in today's episode. A discovery that has the potential to fundamentally alter the course of international finance. The most powerful person in asset management, Larry Fink, the CEO of BlackRock, has reignited the debate on tokenization. And this time, XRP is the clear target of the repercussions. Once written off as a speculative venture, XRP may now be positioned as the tokenized economy's bridge asset. A worldwide financial revolution with global bonds, derivatives, and physical assets valued at over 1.2 quadrillion. Fink has been hinting at every significant event for years, from the New York Times Dealbook Summit to BlackRock's investor calls, and he has always stated that tokenization is the way of the future for the financial industry. The global financial system will undergo a change when stocks, bonds, real estate, and currencies can all be represented on a digital ledger. But in order for tokenization to be effective, there must be a neutral settlement layer that is widely recognized and a digital asset that can manage immediate cross-border liquidity with regulatory certainty and institutional trust. That's precisely what XRP is for. XRP was developed by Ripple Labs to serve as the foundation for instantaneous value transfers between financial institutions rather than as a retail coin. It's the only blockchain project built to deal with the tokenization of everything that Fink has been talking about. The infrastructure for immediate settlement becomes essential as BlackRock works to digitize the biggest asset classes in the world, such as bonds, private equity, and exchange-traded funds, ETFs. If there is no bridge currency to settle those tokenized assets in real time, the idea of tokenizing a trillion-dollar market is pointless. XRP is at the forefront of this change due to its architecture, liquidity model, and demonstrated use case with international banks. Larry Fink's remarks aren't just empty platitudes, they are in complete harmony with the calculated actions of institutional behemoths like BlackRock, Vanguard, Fidelity, and others that are subtly increasing their visibility on the blockchain. According to reports, BlackRock's blockchain division is in discussions with a number of distributed ledger providers, including partners connected to Ripple, and has already applied for a tokenized asset fund pilot. As Ripple obtains legal certainty in the US, the timing couldn't be more crucial. The most potent asset manager in the world intensifies its efforts to implement the precise idea that XRP was designed to do. Let's examine the math that is causing a stir in the XRP community. The International Swaps and Derivatives Association, or ISDA, estimates that the global derivatives market is worth more than 1.2 quadrillion. It's not a typo. Demand may push the price well above any prior forecast if even a small portion of that, say 0.1%, is tokenized and settled using a system that uses XRP as liquidity. With the institutional wave now publicly supported by Larry Fink, analysts have run models that suggest XRP could reach values between $10,000 and $60,000 per token at global liquidity penetration levels below 1%. That amount no longer seems implausible. It is mathematically achievable. You must examine how RippleNet and on-demand liquidity, or ODL, work in order to comprehend how XRP fits into the system. Ripple's system allows banks to convert fiat into XRP, send it instantly across borders, and convert it back into local currency in a matter of seconds, eliminating the need for Nostro Vostro accounts that are stuffed with idle capital. For decades, institutions have been trying desperately to find a solution to the problem of stranded liquidity, which now amounts to trillions. Imagine using the same system now. BlackRock intends to digitize not only remittances, but also the settlement of derivatives trades, real estate contracts, and tokenized equities. Fink places a strong emphasis on accessibility, efficiency, and transparency while discussing tokenization. All three are delivered via XRP. In contrast to Bitcoin, which is still slow and speculative, XRP's ledger can process 1,500 transactions per second for almost nothing. More significantly, it is carbon neutral, which is crucial for ESG-focused behemoths like BlackRock. According to Fink himself, tokenization of securities will be the next generation of securities and markets. That's a roadmap, not a forecast, according to the biggest asset manager in the world. In the background, Ripple has been coordinating with the organizations that will facilitate this change. From Santander and SBI Holdings to the central banks investigating CBDCs, The company has connections with more than 300 financial institutions worldwide. Ripple is positioned as the interoperability layer for Fink's imagined, tokenized future because to its recent filings, patents, and partnerships with ISO 2022 compliant systems. Not to mention that the XRP cryptocurrency is used in both the public and private ledgers of Ripple, which was developed for central banks. XRP's position as the universal settlement asset will become indisputable if these systems converge, as evidence indicates they will. This change is happening faster than expected. Ripple planned a number of experimental projects in 2024 that would use carbon credits and tokenized real estate. These were proof-of-concept demonstrations for the very infrastructure that BlackRock and other organizations would use, not haphazard experimentation. There is a scramble to control settlement railroads as DeFi and TradFi, or traditional finance, start to converge with its extensive liquidity pools, transparent regulations, and institutional uptake. XRP is becoming the frontrunner. Critics frequently wonder why XRP's price hasn't skyrocketed yet. If it is so significant, institutional rollout has the key to the solution. Tokenization is a systemic development rather than a retail event. The financial plumbing is being built by Ripple and its partners, with infrastructure coming first and value coming later. A process that takes years to complete. The floodgates open as soon as Ripple's ODL technology and BlackRock's tokenized assets connect. Speculation will no longer drive demand for XRP. It will rely on the need. XRP liquidity will be necessary for each and every settlement, transaction, tokenized bond, and exchange-traded fund that clears through this ecosystem. This is where the situation becomes even more intriguing. Larry Fink's recent remarks regarding quick settlement and digitally native securities are reminiscent to Ripple's white papers, according to numerous insider accounts and digital asset analysts. It isn't a coincidence, it's alignment. BlackRock's continued collaborations with companies like Citi and JP Morgan, both of which have experience with networks connected to Ripple, indicate that the infrastructure is already being tested covertly. The confirmation in our headline isn't conjecture. Rather, it's a given if BlackRock's tokenized ETF settlement procedure in the future employs a ledger that utilizes or communicates with XRP. Another factor is the geopolitical perspective. The global system is disintegrating as Western institutions shift towards digital assets and BRIC countries strive for de-dollarization. The dollar will not be the only currency in the next reserve network. It will be a digital infrastructure that is settlement neutral, tokenized, and interoperable. Ripple is positioned as the Switzerland of digital liquidity due to its worldwide reach and XRP's neutrality. Bitcoin might continue to be a store of wealth, but XRP might take over as the global transaction layer, the vital component that keeps the tokenized machine functioning. BlackRock, owned by Larry Fink, has assets worth over $10 trillion. The market capitalization of XRP might grow rapidly if even a small portion of that money is transferred over tokenized rails. Consider that 0.5% of BlackRock's managed assets pass through a settlement layer based on XRP, even without taking into consideration global trade finance, real estate, or derivatives. That alone might cause XRP's worth to reach the five-figure area. Ripple has already demonstrated the scalability of its network. The only thing left to do is institutional adoption, which appears to be happening soon given Fink's outspoken support. The $60,000 price forecast for XRP may seem outrageous at this stage, but when you do the arithmetic on liquidity, they start to appear, well, realistic. If XRP were to handle even a small portion of that volume, the total value of tokenized assets may surpass $1 quadrillion. In order to handle transaction magnitude, the price would need to be adjusted based on the necessary utility rather than speculation. To guarantee stability, the value of the token must increase in proportion to the liquidity requirement. This is how the deflationary supply of XRP satisfies demand worldwide. The world of digital assets is about to undergo a once-in-a-century change. The first legal clarification for the now trillion-dollar industry came from Ripple's triumph versus the SEC institutional